Thank you for joining the FreightWaves 3PL Summit today on FreightWaves TV. I am here today with Sam Powers. We're actually going to talk about small 3PLs adding technology to their repertoire in order to make sure that they can compete with large brokers. This is something that I'm overly passionate about. I actually helped build a brokerage through most of my tenure. Sam and I actually have the same amount of tenure in the industry, 8 years. Unfortunately for me, I have not built anywhere near the amount of technology that he has been able to. Sam right now is actually the CEO of Trucker Cloud. It's a freight visibility software that actually allows customers to view trucks based on their ELT data, which is huge right now because we want to make sure that our representatives, sales or carrier sales, aren't spending that much time on the phone. He actually, in his past, was the VP of operations at FactorCloud, which was a software company that helped factor transportation invoices. And lastly, started off at BAM Capital, and it was a factoring company that actually had a TMS attached to it, which is, for me, someone who is in operations, very commendable. He has been a part of growing each of these technologies, and I love software within the industry. I think it's game changing. Unfortunately, I do not have the capabilities that Sam does. So, Sam, go ahead, introduce yourself, and tell us a little bit about your experience over the last 8 years.
Sure. Well, thank you, Grace. As you guys know, my name's Sam Powers. I'm the CEO here at Trucker Cloud. I have been in transportation software and finance, as Grace mentioned, for about the last 8 years. Started out in factoring, building a TMS collateral management hybrid platform specifically for freight brokers. And then, from there grew that operation to serving carriers and various other industries. For financial services. After we sold that portfolio in November of 2019, I then ran operations for Factor Cloud, a cloud-based collateral management platform for factoring companies, and then joined the Trucker Cloud team in July of 2020.
Awesome, Sam. Uh, Overly impressed. I wish I had the capabilities to even attempt any of those things. I was focused on building a brokerage, and that's why we're here today to really talk about how smaller 3PLs can compete with larger 3PLs by using technology. I think that a
Mhm.
lot of small 3PLs right now struggle with um, considering adding technology into their suite. I think that they sometimes shy away from it. Maybe it's going to be too much of an investment. Maybe it might be difficult for them to train their employees. But the biggest thing about running a small 3PL is you need to be able to manage risk. Uh, Unlike the larger 3PLs, we do not have the cash flow to take a hit with a heavy claim. We do not have the time to waste with employees who are being unproductive. You spend every single moment hoping that that cash flow comes in. Something we talked about was, revenue is great, sales is great, but if that dollar doesn't come in at the end of the day, it's not real revenue. So, tell me, Sam, a little bit about the technologies that you've worked with in the past and how you think a small 3PL could use these accessible tools to manage some of the risk. I'm thinking especially, in regards to carriers. I think right now the
Mhm.
industry is seeing this tightening, right? So how can these small 3PLs manage the risk with the carriers so that they don't lose any of the customers due to customer service?
Sure. So I think from a resource or tool standpoint, on a high level, I think there's three, kind of primary resources that a smaller 3PL needs. One, starting with the TMS, which is a known thing, right? That's kind of standard. Two, some sort of financing, whether it be, a bank line of credit or a factoring relationship. And then three, I firmly believe in visibility, right? And I picked those three things, right? Because when we really look at, what are some areas of risk, right? Well, for a smaller 3PL or a newer, up and coming brokerage, securing capacity might be a little difficult for them, right? And, One thing that helps with that immediately is financial stability, right? So if they're able to work with a line of credit or a factoring company, the carriers that in other words would turn them down because they have a newer MC or lack trade history, right? Oftentimes those 3PLs might have to give that carrier a fuel advance or a quick pay of some sort, just to secure that capacity and get that load hauled. By having that financing, it gives them, the ability to support those requests and get that capacity secured. Um, the other piece, and this is more all encompassing, but when we look at fraud, right? So things like you mentioned, if does the broker have the ability to support a claim, or something like that, right? Well, when we think about it, what are the key things, or things that happen often that lead to that, right? A lot of double brokering. Is the carrier that you contracted actually the carrier of record, right? You may pay them, but if they weren't the carrier that physically hauled the load, legally, that the carrier that did has the right to circle back, and it's either the 3PL or the customer that's paying for that, right? And a lot of times, the 3PL might eat that cost just to preserve their relationship with their customer. And we all know you can only do that so much, right? So I think that's a big thing. And then also, on a higher level, did the load actually take place, right? And I'll give you an example. Just kind of, you asked me about, like, technology, and how I could maybe use technology to prevent something like that. So in my factoring days, I did see what I would consider pretty sophisticated fraud, right? And on a high level, what had happened is a individual founded, a alias of a real company, a real corporation. They somehow, opened up a bank account with the real corporation's physical address on their checks, and then gave us a fake, accounts payable contact to verify invoices, right? And what would happen is you would talk to, so-called John Doe. He would tell you that the invoices were good, and you would release advance, then payment comes in on what looks like a legitimate check. All the while they were just, what the term they call it is check chasing, right? So all the while they were just trying to receive advances, give money back, to ultimately build a credit limit and utilization up to a certain point, and then take the money and run, right? So you have kind of the more, uh, is the carrier that you hired really the one that hauled it? But on a bigger picture, is this a real carrier in general, right? And through visibility, 3PLs are able to verify that, and verify it very quickly, right? They can verify the fleet size, the carrier of record, and the actual activity of that vehicle or asset ID, that happened to have been signed to the load. Um,
I I think this topic is really interesting. Anyone, if there's anyone that's watching this right now that is trying to learn more about 3PLs, this situation happens on a daily basis. It is one of the biggest risks I think that is out there, especially for small brokers. These guys, double brokers, they target smaller brokers because they assume that they're not going to have this type of technology set up to catch them. It's scary. It honestly is. It happens so much more often than people think, and I am glad that you really touched on this. How how are there different ways that in technology that you've seen that these red flags are caught, especially more with like the onboarding process with that carrier?
Sure. So I think from an onboarding standpoint, right, there's a lot of external resources out there available, FMCSA, things like that, and then you kind of have your standard, checklist of due diligence when you bring in a carrier, from the beginning, right? But being able to, constantly monitor, actual fleet size and things like that, to me, is extremely valuable. Looking at it from both angles, whether you're a financial institution like a factoring company or a 3PL. But a lot of times, a carrier will tell you, hey, I've got this many trucks, right? and are coming to you saying that they can guarantee a certain level of capacity when maybe in reality they can't, or maybe, this time next month, they lost 5 of those 10 trucks that they told you they had, which could directly lead to a double brokering scenario where, you're building that relationship with them, giving them freight, but then on the other hand, they might be, kind of offloading it to somebody else that you're unaware of. I think another big piece is we kind of go back to, what smaller 3PLs have to provide as far as pay terms, whether it's, fuel advances or quick pays. And, golden rule, and this is where visibility and, that type of technology can really help. Um, Golden rule is you always want to make sure that that carrier or that truck is at the actual pickup location before you give them a fuel advance, right? Well, how can you like 100% guarantee that that truck is there without some type of visibility product, right? Then you can, dive a little deeper there and say, well, what type of visibility product am I using? Is it cell-based tracking or is it ELD-based tracking, right? And I think we could all agree that tracking a truck is definitely safer than tracking a phone. At the end of the day, the phone is not the thing that's carrying or hauling your cargo, right? So I think that that's another big piece to add to it. And then, again, just from an onboarding perspective, going back to, that scenario that I just gave you, right, about what a pretty sophisticated, type scheme. If you were able to verify the fleet, right, then you know that they actually have trucks there that are actually going to be hauling freight. A cell phone doesn't do that for you, but ELD, based location data would. So I hope that answers your question. But there's many different, I guess, variables at hand that could be solved, right?
No, that's perfect. And I think what especially smaller brokers need to understand is sometimes I think they look at it like, okay, well, this is going to be an extra cost, right? My fixed operating costs are going to go up. I'm not in a position where I can handle that. All it takes is $100,000 load to go missing for it to be worth it. So I think it's very smart for people to investigate into these technologies and figure out what is the best tool for them. One thing I know we talked about before was, especially nowadays, is the cell phone aspect. Any carrier who doesn't want to give their ELD access or you access to the ELD is a red flag. Um, at this point, we know you have to have it. So I know that it's in your truck. Now, there are some that are more difficult to connect to, but that should be the number one red flag. And I think a lot of times smaller brokers look at it like, okay, well, if I say no and I don't get this load covered, there's revenue that I might miss out on. But I think it's really smart to leverage the risk that you're taking as a smaller company. A bigger company can handle that loss. Not someone smaller when you're dealing with the cash flow of a brokerage. At some level, we're almost treated like a bank. So you can't lose out on that. And you can't afford to handle that claim. And on the claim aspect, a lot of times insurance isn't going to cover it if you didn't do your due diligence. It's really smart for you to look into what you're supposed to do, what contracts you signed, what you've actually given to your carriers, because insurance will do their due diligence. And if they come back and find that you knew or you didn't take the steps that you told them that they would do in order to cover your cargo, you're dealing with a whole situation. So I think this is something that more companies need to look into. And I think it's something that's important, especially if you're looking to scale. Get it now, grow a good carrier base, and eliminate any risk like that that's really going to take you down. Now, to bring it back to cash flow, something that we talked about as well is understanding that that dollar needs to come back in. And I think it's very important to leverage the factoring company to help with your back office support. Everyone's how can sales be more proactive? How can we get more leads, et cetera, et cetera? How can we drive our revenue back into our hands? What have you seen different technologies on how factoring companies are helping support that office?
Sure. So one thing, and this is where visibility can help factoring companies too. But factors just like the way I look at it is this. For brokers, 3PLs, check calls are kind of like the standard part of the process, right? And factors have something that's very similar to that. Maybe not tracking a load when it's like in transit, right? But they have to perform also verification calls to the account debtors to make sure that the invoice that they're about to purchase is legitimate, right? So there's a lot of very similar workflows between both of those parties that help. At the end of the day, the goal is to ensure that everything will be fluid on the back office and that the money you're putting out, you're able to also collect because. Like you said, a few minutes ago, right? Yeah, getting the revenue is great, but it really doesn't exist, right? Unless you can collect the payment on the other end. So think about this, right? If you're a 3PL or a factor, both of those entities have the ability to support, fuel advances or any type of, quick pay advance to their carriers, right? The carriers definitely want that, especially the smaller guys, because that's money that's going in to keep their trucks on the road and allow them to keep generating revenue. That's why they go to factoring companies to begin with, because they can't wait, naturally that 45, ish day period to receive payment for their services, right? So from a technology standpoint, if and one thing I was going to say, and I apologize if I've already said this, but for a broker or a smaller 3PL that's forced to kind of get out of their comfort zone, issue these fuel advances or these quick pays, leveraging this technology to mitigate that risk before doing so really protects them so that they know they're not putting money out that they would be unable to collect at the end of the day. I think another component to that is their like detention charges. So detention is a very sticky subject, but if a driver, for example, were to have an appointment only time frame and they arrived an hour early, if they try to bill or claim for that detention charge, there's a lot of things that could go wrong because, the broker might go ahead and pay them in advance. Then when they try to bill the customer for that, the customer says, no, we're not going to pay it because the trucking company didn't follow instructions. They arrived early, right? So by using this kind of technology, you have the data to, determine the legitimacy of that request. Maybe the driver did get there on time and had to wait an hour or two before they could load or unload. Well, the data's there. So not only are you reducing or completely removing the potential for risk as far as collecting that payment, but you can also kind of hand it to your customer on a silver platter, along with the invoice and say, hey, look, here's all the backup documentation. Oh, by the way, here's the data to support these additional itemized charges on the invoice, other than, just the line haul rate or the fuel or whatever it may be.
Yeah. You know how it goes now is they just like write it on a piece of paper, like a time that exists, and what does this mean to me? What? So that's awesome. And you know what? To even bring it full circle, and I wish that I had understood the full leverage power of a factoring company. You guys are able to build relationships with these carriers and then service multiple brokers. So in a way, you're almost leveraging a power for brokers to the carriers. And I think what's important is that even when claims arise and things like that, um, use these factoring companies in order to get responses if you're in a hostage situation. Like they're not going to listen if I'm in a hostage situation with a double broker or something along those lines, and I'm just calling and I'm a broker that's given them one load and they have no loyalty to me. They don't care. They're gonna push me. Now, if I make a call to someone like you, Sam, and you call and they know that you have hands on all of these invoices, they're going to listen to you a little bit more. And that is something that I've just recently kind of wrapped my head around. And I think that is something that all operations teams should realize is okay, is the information within your TMS of the factoring company in there so that if your reps need to reach out to that individual or that factoring company, that is accessible to them in order to even mitigate the time for these issues. I can't tell you how many times I've seen a poor sales rep literally spend their whole Friday dealing with just a carrier going back and forth on pay me now, blah, 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 something like that.
Where does the
So
payment go? Yep.
yeah, exactly. So why not get the factoring company involved? And I think that factoring companies are offering so many more tools, really good platforms for payment status, being able to just push your carriers to one platform and say, hey, you need payment status, go here. Think of all the AP calls you're going to cut out. Think of how much time your team can focus on other things and start invoicing customers sooner and getting that revenue in. The thing that a lot of maybe larger brokers don't remember is that as a smaller broker, you need to kind of pay closer to 20, 25 days to start building that relationship. I was telling Sam when I first started, I remember I would tell them my MC number and I would literally just say one number and they already knew that I was too new. And if I was able
Right.
to say, hold up, I'm working with this factoring company that I know that you're set up with, I would have had no issues covering loads in those early days. So I think it's important that all of the brokers, especially smaller brokers that are on here today, trying to find different ways to operationally tighten their teams, look into how factoring companies can help provide you with technology in terms of visibility, but also in terms of support and guidance when dealing with carrier issues. Um, I appreciate you, Sam, coming here today. You
Sure.
are a fabulous human being. When I saw you've been doing this for 8 years, I'm like, what have I been doing for 8 years? So thank you so much. Yeah, thank you everyone for attending the 3PL Summit today, and come back again soon for our upcoming summits as well.
Great. Thank you, Grace. I appreciate your time.